Wow. Greetings, investors of Earth. Here we are, another live session. What a week. And take a couple minutes and say hi to everyone. Thank you for being here. When you see me glance down, it's because I'm looking at the chat. And then we'll talk about today's session. Today's session is going to be this market rally. Is it for real or is it just another fake out? So we're going to talk about that amongst other things. Maybe, well, I won't let the cat out the bag. I'll just wait till we get there. This shouldn't go more than about an hour at the most. So if you're here from beginning to finish, awesome. So there's two people here. One of them is Drew, I would bet, and the other one is Cameron. Thanks for being here. All right. So now that I said my hellos and I'm talking to three whole people, I'm glad that this is being recorded because I do think that this is going to be a very good live stream where we're going to talk about some important things and hopefully answer some questions. So, in the markets this week, we've had some bullish, what some would call a reversal. Just first and foremost, I want you to know I don't think it's a reversal. So let me ask you guys something. I'm about to share my screen. Can you tell me when I share this screen? Can you guys hear me? Hi, Ahad. Can you hear me even though I'm sharing my screen? Test, test. All right, awesome. All right, cool. Hello, Neil. Hello, Ahad. Thanks for being here. Okay, so this is the daily chart. And what you need to know is that every single candle represents one day. This very long green candle back here was the day that we got CPI data. That day, we got bad CPI data. So this is how we make sense of the world, everyone. We got bad CPI data and we gapped down. But that day right there created the fifth largest intraday reversal. That means same day reversal in the S&P 500 of all time. It gapped down and then finished all the way up here. And then the next day went up a little bit at the beginning, but finished the day right here at around what is this, about 35.85? That's where it finished the day. Then the next day we had another green candle. So now we have 3 up days. This candle is red because it finished the day, but if you see it, it actually went higher than the previous closing day. On the next day, it closed green because it closed above where it was. On the next day, which is another red candle, but was actually a green day, right? Go figure. On the next day, it opened up. It opened up here, but closed down here. So that's why that candle was red, because it closed lower than it opened. So in candlesticks, it's relative to when the day opens and when the day closes. Then on the next day, we had our first down day. So we have 1, 2, 3, 4 basically green days, one could argue, ever since we got bad CPI data. And then we had our first little down day, followed by another little down day. And then we got back all of the down days, the two of them back to back. We got them all and then some in one day. And then yesterday, we had another up day. And then today, we had another update, bringing us to where we are now on the SPX of 38.59. Mind you, this rally started on the back of bad news during that intraday reversal. So, what can we infer? And I'm going to go back to the chart in a second. I just wanted to talk a little bit. We can infer that the market on bad news was tired of hearing bad news and said, okay, enough is enough. We've reached the bottom. Let's go up. In this same time, we've seen Chamath Papalatar, his name is hard for me to say, but Chamath, he has said that this is the bottom, we need to buy. We had some analysts saying that this is the bottom, we need to buy. We had Jim Cramer just yesterday saying the markets are healthy and we should start buying. So we have all of these finance celebrities telling us that this is the bottom. Then let us not forget the other day, let me show you this article. That's stagflation. That's Google. Fed. This lady right here, her name is Daly. She is the Fed president of the San Francisco Fed. She said, it's time to start talking about slowing interest rate hikes. Now, she did not say stop interest rate hikes. She said slow down. And we're going to talk about what it means to slow down. I'm going to read this article as quick as I can. The Federal Reserve needs to start talking about slowing down their rapid pace of recent increases in their benchmark interest rate, said San Francisco Fed President Mary Daly on Friday. The Fed has already raised its fund futures by 300 basis points since March. That's 3%, one of the fastest moves in history. This includes 3 straight 75 basis point percentage rate hikes, large moves that had previously been considered very rare. I think the time is now to start talking about stepping down. The time is now to start planning for stepping down, Daly said in a talk at the University of California, Berkeley. The slower pace is important because the Fed doesn't want to over tighten, she said, just as it doesn't want not to raise rates enough for slow inflation. All right, I'm going to pause right there. Let me explain something. The 2000 crash, if you don't watch much bigger and smarter YouTubers than myself who have discussed this, the 2000 crash was caused by over speculation in dot-com businesses. That's why it's called the dot-com bubble. That's the one where Amazon lost, I believe, 96% of its market cap, and then turned into the behemoth they are today. So you see, you can come back. 2008 was caused by the housing collapse of all those really risky and basically disingenuous mortgage-backed securities, which were being put into larger funds, and they were being rated as A plus, which means very safe, but when they were actually like C and D, amongst other things. The 2022 recession, which they tell us, by the way, we are not in. Before they told us we are not in one, we were technically in a recession if we got 2 quarters of negative gross domestic product, declining negative GDP back to back. Well, we got that. By the way, we knew that we would be in a recession because April 1st, the 10-year and the 2-year inverted for the first time. So, because of COVID, how did we get here? Well, we had the 2020 and the 2021 parabolic rise in the S&P 500 because the Fed did quantitative easing. They basically gave 40% of all US dollars in circulation during those 2 years or more, maybe a little bit more. And now, because by doing that to combat the COVID once in 100-year event, to stimulate growth from people not working, they had to print money. Well, that made people put their money in the market, and that made the market rise parabolically, right? So then the Fed created the inflation that we got from that quantitative easing. And now the Fed created this recession that we're in because of their quantitative tightening. Basically, what they're doing is they are trying to force the system to break. They've told us this. They're trying to force people to lose jobs because they have to bring inflation down. The only way to bring inflation down is by um, raising rates, making money harder to borrow. When you make money harder to borrow, that means companies can't grow as fast. If companies can't grow as fast, that means they have to lay people off. If they lay people off, people have less money to spend, et cetera, et cetera. You guys are smart people. You get the gist, right? So this is a recession created by the Fed. So only the Fed can undo this recession. Now, the Fed told us that they were going to raise rates until inflation was controlled to around 2.5%. That is what they deem as normal. They told us this a couple months ago. They said they will keep on raising until inflation is controlled. We got the CPI data. CPI data came in hot, which means worse than the previous CPI data. So a logical, pragmatic person would not think that the market would rally. You would think that the market would go down. But the market does the opposite of what people, the overall overwhelming majority of people think it's going to do. And amongst other things. So when you take into consideration that China has now fraudulently got their president reelected. When you take into consideration that Russia is now telling the US that they're going to start practicing using their nukes, that literally just came out today. When you take into consideration that the war in Ukraine is not getting any better, when you take into consideration that the America's diesel supply has less than 23 days left, when you take into consideration that CPI data is not going down, it's going up. When you take into consideration that all these big tech companies, to include banks, are either laying people off or not backfilling attrition, which means less people are getting jobs. We're getting less jobs. Like it all sounds bad when you take into all that into consideration. Oh, and don't let me forget, when you take into consideration that the Fed said that they are going to continue to bring down rates until we get inflation down. You know, you go into this game, this trading game, thinking, okay, these are the rules. I'm going to act accordingly. But what the Fed did, that daily person did the other day, I believe is not only manipulation, and this is opinion, by the way. By the way, I didn't say this at the beginning. I'm going to say it now. Anything I say, going forward is not financial advice. It is not a telling you that you should buy or invest or trade or whatever. Okay, this is my opinion, and I am giving my opinion on YouTube for the 18 people that are here right now that apparently want to listen. And if there was one person or zero people, I would still be talking because this is getting recorded. And I really wanted to talk about this today. So, what the Fed did the other day, I believe, was manufactured. She was basically nudged, told, made, whatever the truth is, to say that, to prop up the market. Well, why, you may ask? I'll tell you why. We have midterms coming up, and midterms are very, very important for both parties. And the market likes if there is basically 50-50. So if Republicans take some of the Democrat-owned seats because they have majority right now, that's actually going to be bullish for the market. The market does not like when one party has too much power, and that's what is happening right now. One party has too much power. So the market is looking forward to midterms. You got politicians, you got President Biden saying we are not in a recession. That we are not in a recession. The other day he even says we are not going to get in a recession because remember, according to them, he changed the definition. So I believe that if the Fed does do what now they say they're going to do, which they change the story and they do what they say they're going to do, I believe that is the worst thing that can ever possibly happen because the Fed needs to be very aggressive and tough. And they basically, and a lot of people don't want to hear this, they have to crash the markets. They have to break the markets. They have to make people lose jobs in order to bring down inflation. That's the only way to undo what they did. But it's only by doing that quick, fast, and in a hurry that we can get back to a healthy 2.5 to 3% inflation based economy. Right now, we're over 8%, and that is not healthy. So, if they do pivot and either pause or go down gradually, what the Fed is going to create is called stagflation. Stagflation is worse for more people over a longer period of time than breaking the system right now and then bringing inflation down and then reverting back to the mean into a healthy economy. Stagflation is defined as basically many, many years of high inflation and less than great monetary status quo, etc. And also it's so in stagflation, jobs go down at a slower rate, but they go down nonetheless. And stagflation is horrible because it's either sideways or down over a very long period of time. It's very, very painful and affects many, many people over a long period of time. So I'm going to take a quick break and go to the comments because I haven't glanced at the comments, see if there's any comments. And if there isn't, go ahead and add some now or questions. And if there's not, I'll keep talking. Okay. Ren said, pickup artist. Okay. Okay. So there's no more. No more. So there's 17 people. No real questions. So go ahead and add a question if you have one. We're going to talk about a couple things. So I'm going to show you guys a chart again. And let me show you what I see and what I think. Here comes another prediction from Gabe. Again, this is not financial advice. This is not advice to buy or sell your positions. This is just me reading a chart and giving you my opinion, not even prediction. This is my opinion on what's going to happen. If you take it as prediction and you act on it, that is completely on you. I'm going to say it again. This is not freaking financial advice. Don't buy, sell, or do anything based on what I say. Okay, so I'm going to take out these lines for you guys because I don't want them to confuse you. Okay. So this right here looks to me like the beginning of an inverted head and shoulders. Here's the shoulder. Here's the head. We're about to finish with the head because we're right here. So we can actually finish today and that'll constitute a head because we got at the base, right? And then we can go back down again to around the same area, so about 3580 on the SPX, on the S&P 500. And then if we get about down to 3580, what I believe is going to happen, because if you don't know, this inverted head and shoulders is one of the most bullish or daily patterns on the day chart. You can use this on the day and week with my experience, but I only really use it on the daily chart. So on the daily chart, this is one of the most bullish daily patterns. If what it is saying could happen, which it goes down and makes the other shoulder, when we get to about here, I believe in the next 2 to 3 weeks tops. Let me see. Let me see. two, three, four, 5, 6, 7, 8. Yeah, 2 weeks tops, 14 trading days tops. In the next 14 trading days, we can build this shoulder. And if we build this shoulder and then miraculously, because it coincides with, the next CPI data that comes out in November, and that also coincides with midterms that are coming not too far from that date. With all these things coming, it can reverse the bearish, the downturn at around the 35.80. It can reverse to what I am going to basically describe as a short nightmare. It's going to be a super melt up. If you guys think that this one in August was big, this one, this one can go all the way to 4,200. Maybe it can even surpass this high of 43.24. It's very, very possible that it creates a new higher low, right? So if this next rally that we're going to get around here, and if it goes above here, we have now, that's the first step in confirming a possible, I'm not saying it is, but confirming a reversal, because it makes a higher high. I said higher low, I meant higher high. So this was a high, this was a lower high, this was a lower high, etc. If we go up here, we've made a new higher high, and we beat the previous, so that we that could confirm a reversal, but I doubt it would be for long. What am I saying? Long story short, what I am saying is that I believe we're going to go down to around 3,600. I'll even say 3,650, because we're at 3,850, so that's 200 points from here, right? 3,650. I'll say 3,650 could happen. And then with everyone is going to get the Santa rally that they really, really want. The good news is that I believe everyone is going to get the Santa rally that they've been fiending for and wanting, etc., etc. But I will also say, if the Fed does follow through in what they alluded to in February, because December. After November, we have December. So if in December they bring it down to 50 basis points, because it's pretty much baked in, or everyone pretty much thinks that the next one is going to be 75 again. But the one after that, if they make it 50 or 25, and then in February or March they pause, that's going to be bad for our economy long term, but good for the market short term. It'll probably create rallies or what have you. But long term, we will be bleeding a slow death, because the Fed will be introducing stagflation into our economy like they did in the 70s once again. So that was the main rant that I wanted to make. If there's any questions on anything I just said, go ahead and ask me. I'll answer it. But now I'm going to go to the questions. Ren said Palantir earnings. Palantir earnings are November 2nd, I believe. And I'm very bullish on Palantir earnings. How can you tell which is head and which is shoulders? All I see is a mess. I need to get better at this. Let me show you again. So a head and shoulders is can't draw on this. What can I draw on? Let me open up Microsoft Paint. Okay. So a head and shoulders pattern, a normal head and shoulders. So a head and shoulders is bearish. A head and shoulders looks like this. Stock price, head, shoulders. So the head is always bigger than the shoulders. That's very bearish. An inverted head and shoulders is shoulders, head, shoulders. So this continues to the upside. This continues to the downside. This is an inverted Head and Shoulders, and this is a Head and Shoulders. Head and Shoulders is very bearish. Inverted Head and Shoulders is very bullish. This is the stock. Da da da. Stock stock stock. Stock stock stock. Stock stock up. It's going up. Rally goes down. Goes up 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 up. That's a basic unartistic way of showing you a Head and Shoulders. Gabe, are you looking at SoFi? I thought you mentioned during a call last week or so. No, I never mentioned SoFi. No, I don't really look at SoFi. SoFi is extremely speculative, and the only speculative stock that I think will succeed and has been de-risked a lot. But SoFi has also been de-risked a lot. I just don't know it or think I know it as much as I think I know Palantir. Is Palantir? I'm very bullish on Palantir long term. Which head are we talking about? Okay, I'm thinking that's a joke, so I'm just gonna ignore it. Yeah. So, Ren, are you trolling me? I don't look at meme stocks. I'm not gonna talk about GameStop. I think it's garbage. I'm not gonna talk about AMC. I think they're garbage. I think during stagflation, lots and lots of companies that you diamond handers love are going to go out of business, unfortunately. Sorry. Hashtag sorry, not sorry. So yeah, the chat is pretty not talkative today, and that's fine. That's fine. There's 26 of you. I really didn't give any heads up that I was doing this. I just haven't made a video and I wanted to talk about this. No, Neil, I'm just looking at the S&P 500. The Nasdaq is going to do the S&P 500 is where you get the real good signals. The Nasdaq is more volatile than the S&P 500. Hey, Drew. My thoughts. I'm not an expert on oil, but I do think oil is going to do well in these. If we do go into stagflation, I believe oil, lithium, and gold/silver are going to do well. So that's what I think. Again, not financial advice, just my opinion. So yeah. So if anyone has any last minute questions, we're 27 minutes in. This was a good call. My dog is barking. Ask me your questions. I'll answer them. If not, I don't really look into Palo Alto. Do you want me to look into Palo Alto? Do you want me to look at the charts and tell you what I think? And I'll look at their PE ratio and everything. Is Palo Alto something you're looking into? Why would the Fed soften their stance on raising the interest rate? I thought the U.S. was most responsible so far. Well, Colin, exactly. Why would the Fed do that? I don't know, but that is what the Fed came out saying. Fed President Daly said that it's time to start talking about, softening the raise. I know it's crazy. I'm buying put options on BRKA. Okay, so that's a good that's a Berkshire Hathaway. What do you think about VU stock? Technical analysis. My uncle told me it was the best stock I could buy. Yeah, so VU is I believe it's the S&P 500. It's just a ETF, just like SPY is an ETF. So I believe maybe I'm getting confused and VU is a Nasdaq, but let me see. No, it's the S&P. So VU. Listen, this is VU. Let me show you VU. VU is the S&P 500. It's just like the SPY. So you see how it's 353. Well, the SPX is the SPX is just the same thing, almost exactly the same thing, just 3,859. It's just 10 times. It's just 10 times. The SPX is 10 times VU or SPY. Okay. Hey, Doc. Any daily predictions for the next 2 weeks? I don't give predictions here. I give my opinion, and I already talked about that. I am very aware that there's a lot of people who troll me, who are part of a certain person's community. So if you're trying to troll me, probably going to see into it, but I already gave that, so you're going to have to watch the replay. Which is better, Vu or Spy? They're basically the same thing. So to answer that, I'd have to see what the expense ratio on if one has a lower expense ratio, but I don't know. I am not a index investor. That's a question for an index investor. If anyone in here knows the answer to his question, feel free to answer it. So what happened to the UK bond market? I don't know, FMIT. I don't know what happened to the UK bond market. I don't know. I just know that their bond market is all kinds of in shambles. Like they had a prime minister, they fired her in less than 45 days, and now you guys have a new prime minister. No, I don't know if you're trolling me, but I'm not bullish on Dave and Buster's. But since there's no good questions, I will look at Palo Alto. A lot of new names in here today. So I know for a fact that I am being trolled, which is okay. Troll me all you like. That's fine. Troll me all you like. All right, so let's look at Palo Alto. What's the ticker for Palo Alto? Is it Alto or maybe Palo? My internet down. Pan W. All right. Uh, all right. Palo Alto Networks. All right. Let's really quick. This is a pretty healthy. This is pretty healthy. So let's see. So Palo Alto had their highs April on April 20th, 2022. By the way, the S&P 500 had its high on basically January 1st. And where are they right now? They're right over here. All right. From highs to where they are now, Palo Alto was down about as much as the S&P 500. The S&P 500 is down about 21% as well. Okay, so Palo Alto, you know what? Palo Alto has a healthier, believe it or not, chart than the S&P 500 because after it went down, it pretty much consolidated sideways. And and basically once it gets up to 160, not 166, what is that? That's about 175. Heavy resistance will be at 175 because we have a quadruple top if it gets to 175. Now let's look at their one of my favorite. Let's look at their fundamentals. And can someone, while I'm doing this, figure out what sector Palo Alto is in and tell me, it's a quick Google search, tell me what the average PE for a stock inside, for a stock in Alto's sector is, what the PE ratio in the sector of Palo Alto is. What was it? Pan W. I just need to know what the average PE ratio is. Oh shit! Palo Alto has no PE. Okay, Palo Alto has no PE. So right then and there, it would not, unless you truly believe in it, just like I believe in Palantir. Palantir has no PE, but I believe in the story. Plus, it's been de-risked a lot. Palo Alto has not been de-risked a lot, and I'll prove it to you. Palo Alto, during, this is what happened in COVID. They have run up. Oh my, they have run up a lot. They have run up, holy macaroni. They have run up almost 300%, and that's not the all-time highs, that's the current. That's their current. Right. So I don't know enough about Palo Alto to say that, oh, yeah, they're a good investment or this is a good chart. This is actually something I would stay away from simply because I don't know it and it has no PE ratio. Um, they are not de-risked. Palantir is extremely de-risked. It's even lower than its public offering. And I happen to know what they're doing, and I understand the company. So that's why, in my opinion, Palantir is going to do good despite the market we go in. I can't say for the same for Palo Alto. If mine said, if I remember correctly, Palo Alto does like network security or something, kind of like CrowdStrike, right? Which that's another one of used to be one of my favorites. Let's see how they're doing. CrowdStrike. Yeah, CrowdStrike has a forward PE of 86, but that's or what's Palo Alto's forward? Okay, this forward PE means that analysts think they will be profitable, and that when they are, they will have a PE of 44 or around 44. CrowdStrike is in this market also uninvestable, in my opinion. So there's that. But again, not financial advice. My opinion and my opinion alone. Okay, let's go back to questions. I don't know why they ran up, MA. I don't know anything about them. How is a higher stock price mean de-risked? Did I mishear you? Yeah, you heard me. Misheard me. A higher stock price means not de-risked. It means risk. I said Palantir is de-risked because they have come down so much. Mustafa, thoughts on Chinese stock? Like, oh, great. I'm glad you asked me that question, Mustafa. I wouldn't touch China with someone else's money. Would not touch it. I don't care how much it's down. How I wouldn't touch Neo. I wouldn't touch Ani. Hello, Amit. Welcome for the 2 seconds that you're going to stay in here and then leave. Thanks for being here. I appreciate you um, very much. Mustafa, he probably left already. He comes in here, he says hi, and then he goes. He's a very busy man. He has a startup. Okay, Amit. Yeah, I have time. I'll keep doing these as long as they're interest. Okay, so someone asked me HPQ. So let's look at HPQ. First, I'm going to look at the fundamentals. I'm going to look at, a quick snapshot of the fundamentals, HPQ. Okay, HPQ is, what kind of company is this? Oh, this is the HP, the computer makers? Oh my God, garbage. All right. They have a decent dividend. Their PE ratio is very low, so that's very good. However, a good PE ratio with a bad PEG ratio, and you guys need to, so a good PEG ratio is 1. Like, that's great. Anything above 1 is riskier and riskier. So they have no price to book, which means that their market cap of $26.5 billion, um yeah, no, they have no debt, but this is such weird numbers. They have no debt, right? But they do, all companies have some liability. So price to book means assets versus liability. So if you have no liabilities, then it's just assets. And they have negative assets. I don't think I've seen this in a long time. This is very weird. So let's look at the chart, see what the chart says. Cheese and rice. Okay. Let's go to the weekly. Okay, let's go to the monthly. Okay. Well, in COVID, during COVID, they also went up because this is COVID right here. You see, these lows are COVID, March of 2020. They got their lows of COVID where they got to $12.50 a share. Their highs were about 40 something dollars. Okay, so they went parabolic and now they're coming back down. They are basically like Meta, where Meta is back down to its pre-COVID price. Well, not right at its pre-COVID price because let's go back to the weekly because that's not fair. I can't say that. They probably went up a little bit. So pre-COVID was right here. Their pre-COVID price was 20 about 24 bucks, close to 24 bucks, and they are around it. They're at 27.50. So they're above their pre-COVID high, but they lost all of their gains, just like Meta did. They lost all of their gains. It came back down. So, with that said, would I invest in them? Well, because of the fundamentals, and I am super picky, from an investment standpoint, even though they have a dividend of 3.63%, and I look at other things, I would not invest in HPQ. I do not like the chart. I do not like the risk reward. I do not like the price to book. I do not like the peg. Yeah, the PE is good, but look at their forward PE. Their forward PE is higher than their PE right now. So that means they're going to do worse. Why would you invest in something that is telling you it's going to do worse? I don't know, just my thoughts. I'm not looking at Dutch. You're definitely okay. You're definitely fucking trolling me now. Um Warren Buffett owns it, so HBQ is a buy. I doubt that, man. Um, wait, somebody else asked me something else. So okay, so Blackstone Inc. Evan asked me nicely, so I will look at Blackstone Inc. And that is what's the ticker symbol for Blackstone Inc? BX. Okay, BX. Okay, so they're asset management. So it's kind of like a like Goldman Sachs kind of thing. Okay. So analysts are saying their 4P is going to go down, so that's good. Their chart is bearish, which it's going down. BX. Okay, just like the S&P 500, they started coming down. Oh, they started coming down before the S&P 500 actually. S&P 500 topped out around January 2022. They started coming down November 2021. And because of the kind of company they are, which is kind of like a bank, like a Goldman Sachs of wealth management, um, they will they're kind of like a hedge fund where they will do well if they are able to hedge against further decline, right? Um, for a bank, they do not have a great PE ratio. So, like, let me show you guys Goldman Sachs. Goldman Sachs, now that's a decent PE ratio, right? And let me show you Wells Fargo. No, it's no Citibank. Citibank has a really low. Citibank has a PE ratio of 6, right? So when you're wealth investment, you gotta eh, to me, BX is trading too high compared to its peers. So based on that and the chart, I'm going to say I would not invest in it. Whenever you're looking at anything in the future, you're looking at 1 year, but that's 1 year from when it comes out. So remember, forward PE is just based off of analysts. It's analyst rating, so you have to take that with a grain of salt. All right. Hello, hello. Managed to catch you live for a bit. All right. Thank you, Seth Ross. Welcome. I don't like HPQ, Mustafa. I don't like it. I think there's better places to put your money. For instance, me and my Patreon today was talking about Costco. So let me guys show you Costco. So this is Costco. They have a PE ratio of about 38, right? The sector norm for Costco is about 24, 25. But I believe Costco is the king of its sector. So therefore, I would believe it to command a higher PE ratio than the average. So I say I would be comfortable investing in Costco at a PE ratio of 30. I did the math already because I just did it today. A PE ratio of 30 would bring the price down to $395 a share. So I wasn't gonna talk about this, but since we're here, I'm gonna talk about it. Let me get my thing so I get my face. So when you like a stock, but you don't want to invest in it right now because you think it's too high for your picky standards, what do? Well, you have a couple options. You can either A, wait for it, just eye it all the time and wait for it to come down. You can either B, put a limit order at the price that you want. So in this example, 395. Or you could C, do what smart investors do. And if you have the capital to do so, write what's called a cash secured put. Now, I'm not going to go into the many different strategies in writing a cash secured put, but the easy way to explain it was if you want to buy something at 395, you can get paid to own the stock that you want to own um, by writing a cash secured put, because when you write a put, you're giving the other person the right but not the obligation to sell you shares, and they're paying you for it. So if Costco is 4.99 right now, and I write a put at 3.95 that expires in 2 months, someone is going to pay me X amount of dollars for the right but not the obligation to sell me those shares in 2 months. People do it for many reasons, but mainly people do it because they're bearish on the stock. And if they're bearish on the stock, they want the right to sell it to you at a certain price because they think it'll be lower. So that's the quick thing. I believe at 395, Costco is a very good long-term investment in my opinion, but I wouldn't buy it at the current price. I would sell cash secured puts until it gets to that price. Okay, you weren't a troll. Sorry if it came off bad. All right. Alan, Gabe, I've been in and out of SMG a few times and now on the sidelines. The thing has been tanking solid and wondering if you could offer your take on charts and data. Sure, Elaine, since you asked nicely, I will give you my opinion. This is not advice. This is my opinion. You ask and you'll receive. Not advice, my opinion. All right, Elaine. All right, SMG Scott's Miracle Grow. Oh, it's a weed stock. Oh, okay. Yeah, so this will do good if weed gets declassified, right? Or not declassified, decriminalized. The company itself has no PE ratio. It has a good dividend, so there's that. Very interesting. Let's look at the chart. Oh my gosh, what a landslide. Okie dokie. Okay, the RSI on the daily is not something that screams it's poised to it's poised to make a trade or action on, right? It has a dividend. Let's see how much has been de-risked. Let me go into the monthly. Uh, Okay, if you buy it now, you're getting in at basically, oh wow. You're getting in on prices that it was in November of 2007. So I don't know much about the company to know how's their management, have they been doing good things? All I know is that it has no PE ratio, and weed stocks definitely pushed this one and definitely fell off a cliff. So my question to you, Elaine, is this for a trade or investment? I need to know that so I can give you my accurate opinion. Let me know when you hear this so you can tell me if it's investment or a trade. Wow, lots of people are asking me to do. Okay, I'll do a couple, but I got 9 more minutes. I don't want to go more than an hour. I got other things. I have to make 2 more videos tonight. Mustafa, thoughts on the stock of Church and Dwight? I heard fellow YouTuber Joseph Carlson really likes it. They own several good brands like Arm and Hammer and Trojans. You see, in order to give a really informed opinion, Mustafa, I need to know like things like that. I'm just gonna look at a chart and I'm gonna look at FinViz. So I'm gonna write this down, and next time I do a live stream, I will know more about it and I'll let you know. But I can't give you my whole opinion from it. It sounds like you want to invest, and I can't give you my whole investment thesis if I don't know the company. Do you ever copy super investors, sir? Who are super investors? They just got into this. Biggest supplier of general fertilizer for years. Yes. Yeah, they supply fertilizer. Um, okay, investment. Okay, so Elaine, for an investment, no. That's my short answer. Um, because you haven't the chart doesn't say that at very least price has started to stabilize. If you buy in now, you're basically buying in a falling knife, and I can't. For investment purposes, you either have to have a good chart where you know where it's a fair PE, or you need to see a good chart where you think it's bottomed because it's consolidated, etc. So for investment, no. Any opinions on Tesla? Do you think is de-risk? I think Tesla is going to go below $100. Sorry. I love Tesla. I own a Tesla. I love Elon Musk, but I'm not going to say the popular thing so that you guys can like me more. I think Tesla's going down. You really think SPX could take out the June high? Do you have a year-end target range? Brendan, no, no, no. I didn't say I think it can. I think it's possible. I don't think it can. But in order for what I said was, in order for a reversal to start to be confirmed, it has to. That's what I meant by that. Like a reversal can't be confirmed until a higher high is made in that level, Brandon. Do you have a year-end target range? Year-end? Well, I think we're gonna get a melt-up rally. So it's very possible that we get the 3,900 or even 4,000. That's very possible. I think in a year from now or 6 months from now, in my opinion, we're gonna be lower than we are now. That's my opinion. Yeah, look into it, Colin. Cash secured puts are a great way to initiate a investment in a stock that you love and want to own anyway. So, yeah, look into that. When's the next CPI release? I want to say it's definitely in November. For some reason, my mind is saying November 10th, but don't quote me on that. Um, yeah, here I'll look. I'll Google it real quick. November 10th. I was right. Haha. November 10th at 8:30 a.m. When is midterm? November 8th. Yep. Wow. Wow, what a big month we got coming, guys. Holy macaroni. Yeah, we got a big month coming. We got November 8th is midterms, and we got November 10th is CPI data. Wow, 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 wow. Bitcoin. You want me to do TA on Bitcoin? I don't like Bitcoin. I will never trade Bitcoin. I will never invest in Bitcoin. So I'm actually going to pass on that one. It's not a company. It's a greater fool theory, in my opinion. And I won't ask again. Please help me with the regen chart. All right. Big Pharma shill. You did ask nicely. Let's do regen. REGN. REGN. But don't threaten me with saying you won't ask again. I can care less. But because you did ask nicely, I will do it. Okay, so they have a decent PE. It's healthcare. Okay, this is biotech, so it's a biotech with a decent PE. I believe that PE is lower than the average biotech, so that's good. No dividend PE ratio, no peg ratio. That means they have a forward. Their forward PE is up, so that means analysts think they're going to do worse. They have some debt. What's their book? Their book isn't horrible. 3.9 price to book is not fucking egregious. All right, let's look at their chart. They look to be at the top of a range, just really quick by according to FinViz. Okay, REGN. Oh wow, they really went parabolic, didn't they? Okay, they've been growing really well. Now the chart. All right. So before I answer you, Big Pharma shill, is this for investment or trade? While you answer me, I will read other comments. Um, investment. All right, investment. Investment. I would not initiate an investment here because I believe they're at the top of um okay, I can't use that. Can't really use that. Okay. Either way you look at it, and I'm not saying that this is even a great way because I don't have 3 points because you should always have 3 points. So the only way to have 3 points is to do that, right? I have 3 points. One, two, three. So from an investment and a trade, I would hold off. They seem to be approaching. Plus, they have higher RSI than I like to start investments on or trades. So I would wait for them to break through this resistance, right? And then when they do a retracement back down somewhere around this area, somewhere around 680 to 640, right? You can start looking into an investment. If for an investment, I'll say this again, I am very big on patience and writing cash secured puts for a price that you want to own it. Again, this is a very expensive stock, $747 a share. So, with that said, you would need, if you wanted to get in at 700, you would need $70,000 to write a cash secured puts. Um, so there's that answer. Oil, bullish on oil. I don't know what DEE is. Callus needed for the last shoulder to form Apple earnings. Um, man, I don't. It's just speculation, Brandon. I don't know. I think Apple is going to miss. It's going to push us down further. I think Apple's going to miss just like Google missed. Um, I think Apple's earnings going to be really really bad, and I have no idea what's going to be a catalyst. Maybe the Fed pivoting. Maybe they say something very bullish, so maybe they give us 75 basis points, right? But they say, but the next one is going to be lower. I don't know. There's going to be something, I don't know what it is, that is going to start the melt up just in time for the holiday rally, in my opinion. All right, everyone. It's been a good hour. I like to do these things 1 hour. I talk and I get off my chest what I want to talk about, and then I go into the chat and answer your questions or do charts like we did. So thank you for those today. I appreciate that. I hope you got some insight as to my opinion. My no problem, Colin. Thank you all for being here on this last minute live that I do. I'm gonna do more lives. I'm also gonna start doing lives on Sunday. I'm gonna try to aim for 100% of the time to talk about the market in the upcoming week. And I'm gonna put my Patreon in the description. 25 bucks. If you like it, great. If you don't like it, you get your money back. It's pretty active in there. I don't know. I think it's worth the money. I try to teach things like I don't have a course. Literally, we learn together during the Zoom calls. We have many Zoom calls. You can ask questions. It's interactive. You can also reach me anytime on the Discord itself. So if if you think 25 is too much, then don't do it. If you think $25 with nothing to lose is a reasonable amount of money to see what it's all about because you have nothing to lose, by all means, join the Patreon. I think you'll like it. If after your first month you don't like it, you leave and you get your money back. So nothing to lose, information, education, and just a lot of knowledgeable people who are interested in the same thing you are to gain. I'm not selling anything other than my time. So, and giving you my education, everything that I have in this brain of mine. So again, thanks for joining my live stream. I appreciate it. I appreciate all your comments and questions, and I will see you guys next time.